We've been talking about it for a while now in the midst of COVID, this divergence between Wall Street and Main Street. But if a riot on the Capitol building wasn't enough to really dent the markets, what would be?
Yeah, so I went back and looked, and I do this periodically, at all of these dark days in American history. There's nothing there from an investing perspective. Markets were higher within 2 days of the JFK assassination. Markets were back to their pre-9/11 highs by November of 2001. There really isn't any signal when you're thinking about these horrific events and why isn't the stock market being sentimental about it? Because it just isn't. And it's about interest rates, and it's about earnings, and not even about the present, but about the future. So the market looked at the action on, I guess it was Wednesday or Tuesday. It looked right through it like it wasn't even there. But that is not out of character. That is what stocks historically have been able to do, which you can dislike it. You can say, I don't get it. Why don't people feel badly? They do feel badly, but they're thinking about 6 months from today, not what's happening right now.
All right. So then, I mean, quickly, is there a chaos trade to be had here then? This idea of like being able to invest based on some of the craziness from a macro level we've seen in the world?
I mean, the way that we've done this with clients this year, we've said, OK, things probably could take a turn. Things probably could get worse, but we're buyers on those events. We're not sellers on those events. So I think that's been a pretty good way to think about all of the chaotic things we've been through this year, the election, the riot, obviously pandemic stuff. If you've been a buyer on other people's fear, it's worked time and time and time again. At some point, it won't always work, but I think that's still a good playbook for right now.
Yeah.